Good afternoon. George Cavaligos for Naked Trader. Happy New Year, everybody. I'd like to thank Jack for filling in last week while I was out with a lot of good, timely info. Interesting looking at the commentaries this morning when I got back, and I see that Tony's a little bit negative on his system. Actually hit some sell signals in the bonds and notes last night. And Jack is positive, but he wants to buy a dip. Looks like both guys are right here this morning. We had a nice sell-off, and actually the 10-year gap lower last night. As I was opening up Tony's email last night, I saw that the 10-year was actually gapping lower and putting out a pretty impressive little sell signal right around the 120.14 level. It broke a point from there, went down to 119.15 this morning, and hopefully some of you guys were able to catch some of that move. Looks like with the data showing up at 9 o'clock Chicago time this morning, not as bad as expected, I guess, or not as bearish as expected. The market was able to stage a bit of a rally then and really got going when the Fed buyback was seen to be quite aggressive. Volumes are still very light, and I think these moves are accentuated by the lack of volume and lack of participation. Pretty much everybody here in the States is back to work today, but we're still seeing a lot of people over in Europe. Far East are not in yet, and in Toronto and some other places too are not back yet. I'm assuming over the latter part of this week, when we get the non-farm data on Friday, there is a lot of other economic data this week too, with buybacks every day and playing in the Fed's playground, as I put out a little email a couple minutes ago. But we're going to have some tricky kind of corrective trading going on again, I think, this week. I'm still more inclined to be a seller of rallies, but losing some of that aggressive bearishness over the last couple weeks. Look to sell these rallies. Hopefully caught a little bit of a move this morning, made a few ticks, and then got stopped out on the balance of that short position. Again, still, if somebody put a gun to my head and said you got to have a position on in the 10 years right now, or the bonds, I would still have a short position on. But I'm looking for better levels. Impressive rebound off of this morning's lows. And then really good follow-through. We bounced off the lows, and then we just sat up near the daily highs. Still lower on the day, but a little bit of an impressive bounce off the lows. I'm hoping for a little follow-through on the upside tonight. If we can get up to that 120.26 level, that might be too much to look for. Maybe just a gap that we left, 120.14 up to, 120.10 up to 120.14. I would look to try, if I see a reversal off of that gap fill, to put a small short on there. Tomorrow and Wednesday's buybacks are the smallest of the week, between 1 and 2.5 billion of longer dated issues. That might give us a little bit less of a boost into these buyback moves like we saw today, but again, they do tend to give the market a bit of a bounce. We got a lot of data again, so just trying to take like quarter, half point moves out of this market right now. Probably the best bet until we see a big volume spike that will highlight a move outside this range. I think it's the best way to go. I'll be popping up here a little bit more frequently this week. I'll try to get some Eurodollar comments up tomorrow morning. Jack's out this week. I'll try to fill in as well as he did for me last week. Have a great week.
See you tomorrow.